Test, test, test. Yes, we are up and running. Hello, 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 hello. Hi all and welcome. Welcome to another edition of TraderCast YouTube live trading, key trading levels and trading setups for popular markets. My name is Phil and I'll be your presenter today. So let me just see if this is, oh yeah, it is, brilliant. Hello, 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 hello. Brilliant. Hi all. Okay. Very, very briefly, this is about me. If you're looking for the education, check out TraderCast. If you're community, check out TraderCast. If you're looking for the education, check out my trading skills. A little bit about me. Over the past 10 years, I had the privilege of speaking in front of various different industry events, and I taught many people how to trade. Some of my courses are on my trading skills, and they're completely free. So check them out. See how we teach, and if you need help with anything else, let me know. This brings me to a disclaimer. What I'm doing here is practical application of what I firmly believe is what a novice trader should be able to do. This is basically a proof of concept of what we teach in some of the courses, application of technical analysis, timing of the volatility based on the economic data, and very simple approach to trading, trend following, price action, no complicated strategies, no complicated indicators, very, very simple approach to trading. So basically my opinions and experiences. This is not the advice, since I'll be talking to you about some live trades, and if I do get excited a little bit later and maybe trigger a live trade during this short broadcast, I'm doing it as a proof of concept of the analysis that we'll be doing throughout this session. Very, very quickly, these were some positions that I had opened before they were closed. Some of you who watched yesterday's session, you know what happened there. This WTI crude stopped out with 16 points. It was making more money, and I thought it would carry on higher, but it didn't happen. So happy with that. I have two new positions which I triggered recently just now. Actually, I had more positions last night during the FOMC press conference, not so much during the actual rate decision, but the press conference itself. But they're not here because they are we did not really talk about them during yesterday's session. So what I'm doing here is the analysis or the markets that we covered yesterday. So hence there is like a continuation of these key trading levels and the markets as well. So what I have long currently is I have long WTI crude at 111.80, almost 112, and I'm also long sterling dollar at 121.98, almost 122. And now, for those of you who watched yesterday's session, you knew that we were talking about Bank of England interest rate decision, and there was a post in the community for the oversold bounce back in cable, and that's all here. This is all posted, so we are seeing this push higher as well. And from the crude point of view, crude is coming to major daily support. We lost this rising trend line, but we're coming to this rising support here. Slightly different price here because it's a different contract. This is a futures contract, but the chart looks very much the same. So what I'll do is I'll show you those couple of trades first, and then we can talk about sorry, bear with me a second. We can talk about other stuff very quickly. So where am I now? Here, open market in a new window. If you have any questions, let me know. Ask in the community. You know how to access the chat there. Post the question in the community as well. So very quickly, this is crude oil. This is shorter term, 15-minute time frame, and we are seeing a pullback. And then for those of you who have seen some of my sessions before or went through some of the courses, you know that I respect the daily lows, especially if I see this kind of a nice reversal candle here. It's colored red. It's not exactly the bullish hammer. I would like it to be green top, but it's the same shape, so I liked it. And then that was followed through by another green candle here. So we have inside bar here, followed by a bullish hammer, followed by a bullish breakout. So this high is higher than this one. I decided to open the trade when the next candle opened, and I see this as a potential breakout higher. Currently my stop is down here just below these lows. I would likely be moving my stop loss higher very quickly, and I would also be looking to take partial profits as we go along as well. So this trade is currently open. From a trade management point of view, I will not touch my stop loss in the sense that I'm gonna move it to break even or above break even, because we could still see a little bit of fluctuation, but it's very close to these lows. Let's say 56 points below where I entered. Looking for this to play out to the upside. I'll keep you informed about the actual management of this position as we go along. Now this is cable here in 4 hourly, and I'll show you this chart in more detail a little bit later, but this is the analysis that we had yesterday ahead of Bank of England. There is a post in the community as well talking about this. Yesterday we had Federal Reserve, so US dollar volatility. Federal Reserve hiked rates as expected, and the press conference said, don't expect this to happen every single meeting, you know, this is not the normal size of the hikes going forward. But here we go. So and now Bank of England, and now we're pushing higher. Significant low at 1.20. There was this consolidation here, 122 cluster of these lows. We are breaking out higher. We are into resistance zone, but I would like to see a little bit more upside, and if that upside is to form, then this previous resistance here would become my point of control. So we could see a rally, 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 and then reversal here from 123.50. I would be happy to take partial profits there, breakouts above there, so something like this. This is what I'm talking about. So rally, rally, rally. Apologies, I should not be moving this one. So this one is referencing here. So rally and a breakout like this. Rally breakout, and then that could open the way for a gradual move higher into this zone up here. But all of this here is a resistance zone from 123.40, 50 to 124.80, almost 125. So significant area of interest for some profit taking. But I'm going to leave this running for now, and I'll show you where I entered and what I did with that, and then we can go and talk about some other markets as well. I'm also looking at gold. I don't have anything open at the moment. For some reason I have the tendency to I know, you know, I keep saying follow the trend and, you know, make sure that you trade in the direction of the prevailing trend, but it's very, very difficult for me to short sell gold. I keep finding this buy triggers, buy sells, so maybe I'm becoming a little bit biased in relation to gold. I think I was talking about that yesterday, day before yesterday. It's a dangerous thing, having a kind of bias or a firm belief, but so far anytime I got stopped out or anytime I had a losing trade on gold, it was manageable. It was a small amount, either in number of points or in monetary loss. When the trade was good and it played out, it covered all of those and made up more. So I'm happy with that. So anyway, but not talking about gold here, talking about sterling dollar. This is that open trade, previous significant swing high 122. I was looking at this from much shorter term time frame, and you can see that when this candle broke and then the next one opened, I decided to go in. Now I have a little bit of a trend here. My stop at the moment is at 120.160, so 40 points of risk, not even that, 37.5 points of risk. I'm gonna keep it running, but what I'll do is I'll just move my stop a little bit higher, maybe 25 points of risk, but I would like to see a breakout towards that 123.40, 123.50, where I would likely be looking to take some partial profits, and very likely move the stop above the at entry or above the entry. But this looks encouraging for me, so I'm keeping that open as well. Now what I'll do is I'll go back to the normal routine now, and tell you where we are with Dow is coming to a good level as well for a reversal. S&P is also coming to
more commentary, some more colour from this Financial Times piece, as Mario Draghi's economic advisor says investors are overly pessimistic about Italy's economic fundamentals. He says what really matters for investors is not the level of debt, but the trend in debt to GDP ratio. And he goes on to confirm that the Italian government sees economic growth of about 3% this year in Italy.
Hey. Welcome guys, welcome. Now I can see a few people are coming in. There is loads more stuff to come. I think we could see another fairly volatile day again today, but I'll cover as much as I can in this short period of time. So currently, for those of you who missed it, this is where I am. These are my trades from yesterday, and then this is what I have currently open. I had 3 or 4 other trades last night my time, you could be in a different time zone, which were triggered by FOMC press conference and what Mario Draghi, what Jay Powell was talking about, and the messages that he was giving and how the market reacted to that. But I did not put those in because those were triggered by volatility breakouts triggered by news rather than the analysis that we had in yesterday's session. So we talked about cable and the reasons why it could become volatile today. We talked about euro dollar, we talked about dollar yen, we talked about oil, we talked about gold, we talked about a few other things as well, in particular S&P as well. So so this is the reason why I've added those 2 positions, because they were triggered recently and so on. But here we go, very quickly, and one of them is posted in the community as well. Hey Hamid, Patrick, Robert, Eladio, Sides, Mike, Suta, Darren, let me see who else is there. There's quite a few people. Oh wow, plenty of people in. Zhao, Teso, Yuan, Yomar, Carvalho, Daniel, King, Jimmy, Mr. Gaga, Aya or Aja, Jamil, John, Guti, sorry if I'm pronouncing this wrong, Katya, Mateas, Mudassir, Omar, Yusuf, Pierre, Stephen, and Mr. Wilson as well. So plenty of people in. I don't know how many of you are actually watching on the outside, but that's fine. So let me just go back to the normal spiel and tell you about top 5 things we should know before we start trading today. The one that we were talking about is market mayhem. Markets are on the back foot again with Wednesday's post-Fed euphoria proving short-lived. S&P and Nasdaq futures dropped over 2%, while 10-year Treasury yield surged 15 basis points, about 3.4%. The Swiss franc gained more than 1% against the dollar after Swiss National Bank surprised again, with 0.5% rate hike, or half a point rate hike. The pound was little changed before that expected rate increase by Bank of England, and now it pushed higher as well. Recession, everybody's talking about that. Recession risk. The Federal Reserve raised interest rates by 75 basis points, the biggest increase since 1994. Chair Jerome Powell signaled another big move next month, although he did say, don't get used to 75 basis points. This should not be the norm. Okay, it's too soon to call an end to America's worst bond market collapse in last half a century, as Powell took step towards assuming the multiple of inflation slayer Paul Volcker. Policy makers boasted expectations for where the Fed benchmark rate will end next year to median of 3.8 from 2.8%.
China's COVID situation. US ambassador to China says that China may keep zero COVID into 2023.
Which was a previous estimate, 2.8, so basically a full percentage point higher. It may take a recession to stamp out inflation, and it's likely to happen on President Joe Biden's watch. Now, surprise hikes. This is all from the reports. This is from Bloomberg. Getting it on central bank action this morning is the Swiss National Bank, which surprised markets with 50 basis point hike, the first rate rise there since 2007. All economists surveyed by Bloomberg.
Note from JP Morgan, their strategists say that stocks imply an 85% chance of US recession. They say the S&P 500 now implies an 85% chance of US recession amid fears of a policy error by the Fed.
All economists surveyed by Bloomberg.
The warning from quant and derivatives strategists is based on the average 26% decline for the S&P 500 during the past 11 recessions, and follows the US benchmark collapse into a bear market amid concerns about surging inflation and aggressive interest rate hikes.
I'm going to start again. All economists surveyed by Bloomberg ahead of the decision had seen no change at this morning's meeting. Hungary also unexpectedly hiked rates as the central bank tries to shore up the front, which fell to forint, which fell in to 400 to euro for the first time this week. The Bank of England hikes, and the Bank of Japan is unlikely to announce any policy changes at this meeting, even as the yen trades near 24-year lows against the US dollar. So we are seeing dollar yen.
ECB's Visco says conditionality and spread fighting tool is about verifying orderly economic fundamentals. And the US ambassador to China says US and European companies are hesitant to invest in China now.
This is dollar yen. Normally, if you see, this is US dollar weakness against the Japanese yen, but overall, the picture looks
Visco
clear.
Says we can imagine conditions depending on the generation EU and stability and growth pack.
So if you remember, over the past couple of sessions, I was looking for a pullback to 132.60 for another leg higher.
So just to repeat there, Visco saying we can imagine conditions depending on next gen EU and stability and growth pact.
So we got a pullback finally, and let's see if we get a rally from here. Otherwise, if we see a loss and a daily close below 132.60, we could possibly see dip towards 131.20 for a retest of this breakout high. I'll talk about dollar yen in more detail as well, but yet again, Bank of Japan, that's the big one. Anybody who's trading Japanese yen crosses should be paying attention to that. Cryptocurrencies stumbled Thursday on the prospects of a sustained campaign of Fed interest rate hikes. Everything from Bitcoin to smaller and sometimes lesser known tokens, so-called altcoins, gave up the bulk of earlier gains. A drop in Bitcoin below 20,000 could trigger large liquidations of leveraged positions, crypto executives are saying. Crypto lending platform Celsius Network may have limited option to stay solvent after its decision to freeze withdrawals helped set one of the biggest digital token meltdowns in years, according to crypto research from Keiko. Now that's enough of the reports and boring stuff. Let me show you where I am with my positions, and then we can take it from there. Again, so this is my oil position. I got in at 111.80. That was my price. This is a 15-minute chart. Don't like this pullback here. So what I'm going to do right now is I'm going to take a little bit of this position. So I'm going to take 3 out of this position. I'm going to pay myself quickly, leave 7 little contracts running, and I'm going to move my stop very close to break even here. You can't possibly see it. I don't know if you can, but my stop is about 80 euros, or let's call it 10 points. 10 points in risk. So whatever I made on this third position profit, I might lose on my stop here, so that'll break it even. But I'm still allowing it to run. I still believe that we could see more upside. But hey, markets can become volatile for various different reasons, and I'm just gonna leave it running for now. The other thing that I have open, for those of you who've seen this earlier, you know I'm long cable at the moment. I'm long from 122, so there is my entry. There is a significant swing high. Now this is the entry, this is a stop loss. Now it's a good time to put the stop at break even. So now I feel that I'm okay with this trade. I don't carry any risk. I might not be looking to take profits just yet, because we are above these highs. So really the next level of interest comes up here, 122.60 or thereabouts. So that could be a possibility for partial profit taking, and then I would likely move my stop loss slightly higher to lock in some more profits. This position is very speculative. It's completely counter trend, but it's triggered by Bank of England. So we talked about all of this yesterday. Nothing new here from the analysis point of view. Joseph Anthony, quadruple witching tomorrow is a factor to consider for volatility short term. Joseph, yes, absolutely. Quadruple witching always triggers some volatility in equity, across a range of markets, because you have stocks and futures and options all doing their thing to crucify as many people as possible. Now, where are we now? So is there anything else that we should Yes, thanks for sharing. Brilliant. So, where are we now? The other thing, unemployment insurance weekly claims, initial jobless claims, 299 versus 217,000. So this is weekly jobless claims in US came in much higher than expected. A little bit a few news on Bank of England. Bank of England policymakers hiked 25 basis points. 3 voted for 50 basis points hike. So just in case if you were not aware of that, the bank rate increased to 1.25, 1.25, and Bank of England sees Q2 GDP minus 0.3% quarter on quarter. In May was plus 0.1 quarter on quarter. So not very pretty for UK. Various different things. Northern Irish tensions with the European Union. Loads of signs from UK, including the housing. Are not looking very good. But here we go. So far, this little trade on cable is doing well. This is the trade on crude oil, and this is still holding. The basic premise was that this was the trend line. This was a pullback to trend line. This was a continuation pattern, and it was supposed to break on the upside. So that was a basic premise. That didn't happen. I did go long, and I moved my stop loss slightly above the entry, and I got stopped out. That was all covered yesterday. Now this is no longer valid as a setup. Now this is potentially something different. So I could possibly draw a very steep falling wedge, and if you don't know what it is, it's not complicated. It's not complicated. You can go to My Trading Skills. There is a free course on continuation pattern or a price action trading continuation pattern. For those of you who are members of TraderCast community, you can get in on the education. Let me just show you can get your courses there. It talks about how to trade this pattern, and they have the tendency to break to the upside if we are in a clearly defined uptrend. The trigger for a breakout to the upside would be a rally from here and a breakout, possibly a retest for another leg higher, slightly leg higher. Crude oil is elevated at these levels. It is elevated at these levels. But let's see how this plays out, and if we see another leg higher. What would change my mind from the daily point of view, if I see a push lower and an end of day close below this blue shaded area, and then possibly something like this, the price could dip lower, and then we could see a retest from underneath. So that was support, and then support, loss of support becomes a newly found resistance, and then the price could very quickly move lower. It would look something like that. Now how far can it go, and where could it possibly stop? Well, I would normally take the fib from here to here and look for a 61.8 fib retracement, which would be close to these highs, close to these lows at 108.90, 109. Yet again, your brokers might be giving you a different price. You might be given the opportunity to trade a different futures contract, which has a different expiry date, therefore different price. Some brokers are offering continuous running contract, which is basically the spot price as well. So it depends who you trade with. Your call,
Money
nothing to
markets
do with
bet
me.
on
But
a
just make sure that
50% odds of a 75 basis point Bank of England hike by September. So that's money markets betting 50% odds of a 75 basis point Bank of England hike by September.
okay, we are very close. We are very close to my partial profit taking. Now look at this. Look at this baby. This baby is going higher. This is very good. This is very good. Phil, well played. This is very, very good. Really happy with that. So now what I'm going to do is I'm going to take partial profits on my cable. For some of you who are watching this and you're confused with what I'm doing, it's not complicated. It really is not complicated. What I'm doing here is really basic stuff. We are coming to that point now. Previous low, previous high. I'm going to take some money off the table. I'm going to take 2 out of this 5. So I have 2 out of 5 contracts. I'm going to pay myself a little bit of money, and thank you, Mr. Market. Really happy with that. It is possible that we could see a bit of consolidation here. Not unusual at all. What I'm going to do as well is I'm going to move my stop slightly higher, and I'm going to lock in another 20 points on this trade. So just in the case if we see a corrective pullback, I will try and get out before I get hit. But if I'm talking to you or if I'm busy otherwise, at least I have something in there to protect me from losing all of unrealized gains. So my stop loss is my take profit as well. Really happy with that. Leaving the crude oil is running as well. That's doing quite well. That's doing quite well as well. I'll show you that in a sec. So here we go. This is my crude oil. This is the crude oil position. Perfect timing for stop at break even. Stop at break even. I'm gonna just let it run for now. Guys, I'm gonna go on silent for a second. As you can see,
Regarding energy, Italy's ecological transition minister says reasons behind Russian gas cut could be a lack of spare parts due to EU sanctions against Moscow, or even intention to exert political pressure.
be back in a sec. Hey, back with you, back with you, back with you now, back with you now. Apologies. Okay, where are we now? Oh, thank you, Joseph, for explaining. Thank you for explaining. Okay, cool.
As a heads up, US Defense Secretary Austin is now speaking to reporters in Brussels.
Uh, what I would like to talk about right now, guys, is equities, US equities. We're seeing a little bit more pullback. Yet again, we talked about a bearish setup in Dow yesterday. There was another bearish setup here, triggered. Same story over and over again, just a slightly different line. But let me talk about that right now. US markets are open. They're open for test.
US envoy to China says that China has been too aggressive in too many areas.
Okay. This is a clearly downtrending market. So downtrending market in weekly. The point of control was at 30,440. Initial support down here from the weekly point of view. We're talking about August, September, October time of 2020, almost 2 years ago. Now there is a daily time frame which is pushing lower. This little reversal here is what we got with it's basically a reaction to Fed. This is the 4 hourly, and the 4 hourly is painting, guess again, a triangle formation, which happens to be a continuation pattern. So yet again, don't be confused. You see them over and over again. The market pauses, and then breaks in the direction of the prevailing trend. They're quite tradable. Yet again, unfortunately I was talking and I didn't get to enter into this trigger, but there'll be another chance here as well. I wouldn't be surprised to see a little bit of pause in this shaded area here. So the price that I feel could possibly cause the price to pause for a bit is at 29,800 on Dow Jones, all the way down to 29,400. So it's about 400 points of potential support area. And what I mean by that is something like this. So you could see a little bit of a flush lower, maybe for another 20 minutes or so, and then something changes around 3 o'clock, and we see a bit of a 3 o'clock reversal, and then we see a spike higher, and then that spike higher could then possibly reference these lows at 30,300. I would also take the fib from here to here. This is my 61.8% retracement. So this zone here would likely trigger interest for the bears, and what they would like to do. And yet again, if I'm confusing anybody with what I'm doing here, there's plenty of free courses on my trading
and
skills.
China's
Go and check them out.
CNPC sign a technical agreement on gas supplies via Far Eastern route, according to Gazprom.
This would be another short entry for the bearish traders. So The alternative would be rally and a breakout above there.
So just to repeat there, Gazprom and China's National Petroleum Corporation sign a technical agreement on gas supplies via Far Eastern route, according to Gazprom.
My crude oil is topped out, guys. My crude oil is topped out. Just realized that while I was talking. So breakout, retest, and a push high. So that will be a counter trend squeeze higher into this zone here, where another lot of sellers will come in and short sell again. So that's where I am with Dow Jones. Loss of these lows, possibly a retest or a daily close below these lows down here, 29,400.
Seeing here that Biden is to launch a digital infrastructure partnership at G7. And as a heads up, US National Security Advisor Sullivan speaks at an event.
And this is a 15-minute time frame. So far, this appears to be triggering a bearish move lower. What I'm going to do right now is I'll show you where I am with that crude oil, because I got stopped out. This is no longer...
Regarding crypto, US Treasury official says department is monitoring activity in cryptocurrency market. Recent turmoil underscores urgent need for regulatory frameworks.
So crude oil, it's coming down to that level again. So it flushed lower, picked up my stop, and I'm out of this trade now. So hence I feel really happy now that I took partial profits and I moved the stop and managed risk in the appropriate way. So leaving that running for now. There is nothing open on that trade. This is flat. There's nothing on this trade at the moment, so you can see there are no lines. The stop triggered and it picked me up. So from the history point of view, I had crude oil okay, so the first lot was closed at 112.07 or thereabout, and then the second loss was at break even 118.80. So it's actually 83. So I got, there was either a slippage in my favor or I moved the stop loss slightly higher, so I got almost 2 points on this trade. Cable, I closed 122.77. Okay, proportion of that trade was closed on 122.77. Okay, I'll update it and let you know where I am with that. Test, yeah, this is all working. Come on, Dow, you want to pop higher? Come on, Dow. So here we go. So this was I said 1/3. So 1/3 closed. Sorry, 80. Closed 1/3 of the position. 3 contracts at 1-1.
Regarding nuclear talks, US National Security Advisor says there's more to come on the Iran designations.
And 2/3 at break even stop loss. So yet again it made a little bit of money on this, so happy with that. That was a blue, I'm gonna color it blue. Cable, I'm still in this trade. It's okay. I closed, what did I close? I had 5 contracts, I had 3, so sorry, I have 3 or 2. So let's say half. It's not exactly half, but closed half at 1 spot 22.77. Stop is now above break even, locking in a little bit more money, but there's still a position open. That's it. That's where I am with current positions. But it's not, cable is not looking as sexy as it did earlier. Hopefully you can
US
see it.
National Security Advisor says a return to JCPOA remains a live possibility.
So that's where the entry is. Stop was initially below, higher, at break even, took partial profits here. You can see by this candle how many other people are thinking the same thing. They're referencing this consolidation here. Us traders, we are dumb people, you know, we are really stupid. We can remember levels, and then we react to them. It's, oh, it paused there, it price did something at that level before, so therefore, and subconsciously almost you're reacting to this. Or you can see it on a chart, or you have a kind of alert set up with your platform or something. But look how many other people were thinking the same thing. So they either entered short, or if anybody was long, they took partial profits, or they closed their position. And that's creating this selling pressure here and a candle reversing. So I'm happy that my stop is above the entry. I'm locking in another 21 and 22 points, call it 22 points, 21.7 points, call it 22. And if this holds, and when we see a breakout above this little swing high, that will be really encouraging. I would likely expect cable to carry on pushing higher towards that 123.40, 123.50 area. That's where I am with the sterling dollar, leaving it running for now. Leaving it running. Test, yes. I keep checking my microphone here. So there's gold. Gold is basing again. Gold is basing again. Sorry, not gold. Crude oil. There's a little bit of buying pressure here. It's still early time. This is a 15-minute time frame candle. We still have a time for this candle to complete. It's not completed yet. It can look completely different when it's finished. But let's see. Let's see. Now, let me just see. Where are we now? Very quickly, what I want to talk about as well is we covered yen, we covered gold, we covered oil, we covered Dow Jones, we covered cable. I do want to talk about euro dollar very quickly as well. Now, euro dollar, from a trend point of view, downtrending. Consolidation here. Point of control in my book is up here at 104.80. Euro dollar definitely needs to break. Keep saying the same thing over and over again. We looked at it the other day. It needs to break through here, possibly have a retest from above for a short squeeze, and then the price could do something like this, create a short squeeze and then a push higher. Initially at 105.50, break above 105.50 could open the way for a push towards this falling resistance trend line, and also a cluster of these lows here. So that will be another point of interest. And if that happens, bearish traders would likely come in here and look to engage for another leg lower. So that's the basic premise. The other bearish scenario would be if I see a selling pressure from here, then loss of these lows, and then another leg lower could possibly occur, targeting lower levels. But so far, this looks like it's consolidating sideways against the overall bearish prevailing trend. A little bit of indecision here with this inverted hammer at the low of the session. Then we have a spinning bottom, which is this candle here with wicks on either side and a small body. This candle today, if it finishes green, it could be a hammer. It's all indicative of anybody who is short is looking to close their shorts and take profit. If they're taking profit, they need to buy. Shorting is nothing more than delay order to buy, because you need to buy in order to reverse your short, and by doing so, this pushes the price higher a bit. So keep an eye on it. There is no trade for me in euro dollar at the moment, but I'm paying attention to it. Recently we had the European Central Bank emergency meeting as well. We had Christine Lagarde speaking. We had all sorts of different things happening. So let's see. Crude oil is not settling. Here we go. Crude oil is not settling. It's pushing lower. So this is definitely... we still have about 7 minutes for this candle to finish. So I'm happy I'm out of this trade. I'm happy I'm stopped out. So that's it. Now, guys, it was lovely talking to you all. I'll be back with you tomorrow. There we go. See you all tomorrow. We have people from different time zones watching this, so just letting you know when we are on. Thank you. Stay safe, and bye for now. Thanks.